How much of a deposit do I need to buy a house in the UK? After doing a bunch of research, I realised that that is the most commonly asked question from people in the UK that are interested in buying a house. So in this video, I'm going to break down exactly what you need to know so that you can figure out exactly how much money you need in order to buy a property in the UK. Before I go into how much of a deposit you'll actually need, you need to understand how mortgages work, how it works borrowing money from a lender to buy a property. You see lenders, so like banks or building societies, they will lend you money, mortgages, to be able to buy a property. Now how that works is they will lend you the money and over years they will put an interest on that loan that compounds over time that gives them a really good return on their money. Now the key thing with lenders is they want to do everything that they can to mitigate risk. They will lend you money on what's known as an LTV basis. LTV is loan to value. Now what that means is if you have a house that's worth £200,000, how much will a bank give you versus how much that house is worth? So if a bank is happy to give you £150,000 on a £200,000 property, that means they're happy to give you a 75% loan to value, LTV. The reason that they do this is so that they have a buffer, like a margin in place, so that for whatever reason, if you decide to stop paying your mortgage, they can repossess the property, take the property from you, force a sale on the property, and know for certain that they are able to recoup that cost. The reason they do this is simple. It is to mitigate their risk of losing money. So when it comes to buying a house, you need to put down a particular percentage of a deposit when you want to borrow a mortgage to enable you to buy that property. Now, how you buy it, how risky the bank deem you to be, or how you're going to be using that property will determine what kind of a loan to value they will give you and therefore how much of a deposit you need to put down. So let's give a couple of examples. You've got somebody who is a home buyer. They're going to be buying this property for a home to live in, to move their family into, and so on. You've got a home buyer. And you also might have a buy-to-let investor over here. They're buying the same property, but they're going to be using it for different reasons. The bank will look at that and see those different profiles as different levels of risk, which is why on average you're looking at, as a home buyer, you need to put down a minimum of about 10%. You have to put down 10% deposit and they will give you a 90% loan to value. They see a buy-to-let property is slightly more risky and therefore they ask for a 25% deposit because they will give you a 75% loan to value. Now this does slightly change, and at the point of recording those are kind of the standard numbers, but things do vary sometimes. Some lenders are happy to give an 80% loan to value on a buy-to-let, which means you only have to put down a 20% deposit. For some home buyers, you may have seen you're able to buy a home and just put down a 5% deposit. So it does really vary, but typically the standard is if you're buying it to live in, it's going to be 10%, and if you're buying it to rent it out or buying it for commercial purposes, the minimum that you need is 25% of a deposit. So you might be there thinking, okay, perfect, I'm looking to buy a house, I know the house that I want to buy, so simply I need to look at, let's say, a £300,000 house, I need 30k to buy it, and then it's job done. Well, it doesn't really work like that, and I'm going to explain why and what else you need to factor in when it comes to buying a property. One of the other things that you need to factor in is something called affordability. Just because you have, let's take a home buyer for example, just because you've got £50,000 in the bank, that doesn't mean that you can buy a £500,000 property. The lender will look at you as an individual, look at your income and work out what your affordability is. This is another risk mitigation technique that the lenders implement to stop them being at risk of losing money and you not being able to pay back the loan that they've given you. I'm going to quickly explain why that matters when it comes to working out how much money you need to put down as a deposit. But just quickly before I do, if you take a look at this screen right now that I've got up, this is the Money Saving Expert website where you can work out how much it is you can borrow. So if I said, for example, if I earn £50,000 pre-tax, that's my income, it's just me applying for a mortgage, I've got no bonuses or overtime. If I click on calculate here we go, straight away, right on the right hand side, you can see here it says I can borrow from typically about £162,500 to and £25,000. So if I have a £50,000 lump sum in my bank, I can't just go straight to the bank and say, I want to borrow £450,000 and buy a £500,000 house. I have to work within my affordability. So I would start here, work your way back. So you can use this website, it's really simple to use, or you can go to a mortgage broker, mortgage advisor, and they can give you a really clear understanding of how much you can borrow, because that will determine the overall price of the house that you can buy, and therefore the minimum requirement when it comes to putting down a deposit. Now, if you're finding this video helpful, there's a few more costs that I want to throw out to you, but just before I do, make sure that you click the subscribe button, click the bell notification as well. It will notify you when I upload so that you don't miss any more videos that I post. I'm posting every single week, and I'd love to have you a part of this community, so make sure that you hit the subscribe button. Now, I know this video is titled, what kind of deposit do you need to buy a house? However, there are other costs that you need to factor in that a lot of people seem to miss. The next biggest cost for most people is something called stamp duty. This is a tax that you have to pay when it comes to buying a property. Now, how much you pay will be based on your individual circumstances. So the very best thing that you can do is go to the government website. They have a stamp duty calculator. All you need to do is put in a couple of little details and they will spit out exactly how much you need to pay in stamp duty, so you can factor that in to your costs. You also need to think about your legal costs. You've got to pay a solicitor to go through the conveyancing process of buying. So typically you're looking about £1,000 to £2,000, sometimes a little bit more, sometimes a little bit less. It completely depends on the solicitor, but I would work off of like a £1,000 to £2,000 budget. You've also got to think about your mortgage broker or your mortgage advisor, their costs. A lot of mortgage advisors are free and they get paid by the lender, but some mortgage brokers ask you to pay as well as their clients. So that can be like 100 quid, 200 quid, all the way up to like 1% of the loan value. So if you're borrowing £500,000, they would expect a £5,000 fee. So you just need to make sure that when you speak to your mortgage advisor, speak to your mortgage broker, you know what their costs are, what their fees are. And the only other cost that you really need to think about is things like building insurance before you actually buy it. That's something you'll need to factor in, but that's peanuts compared to the rest of the costs that we're talking about. Now, if you add all of those costs together, your deposit, your stamp duty, your legal costs, mortgage advisor fees, your building insurance, that's everything that you need to pay in total. Now, what a lot of people do, and a mistake that a lot of people make, is they look at something and say, we've got a £20,000 deposit, we're gonna buy a £200,000 house, but what they haven't factored in is the extra few £1,000s it's gonna cost for stamp duty, legals, all those other things that I mentioned, which means that they end up being out of pocket, or they need to borrow, like to put it on a credit card and all sorts of stuff. So people can get a little bit stuck when it comes to the additional costs. So when you are looking to buy a property, whether it be a buy to let, whether it be a home for you to live in, make sure that you are factoring in all the other costs as well as the deposit, because that will give you a clear understanding of how much money you need to outlay when it comes to buying this property. Now, ultimately, probably the best thing that you can do when it comes to buying a property, working out how much of a deposit you will need exactly, is speaking to a mortgage advisor or a mortgage broker. So if you need any help with that, I have a few contacts that I'm more than happy to share with you. If you need any help, get in touch. I'll put a link or an email address or something in the description of the video. Reach out to me and I can put you in touch with somebody that could maybe help you. But if you are wanting to get started in property and you maybe don't have the deposit to start buying houses yourself, I'm taking a handful of people and teaching them how to get into property, how to start making money from property without actually having the deposit themselves. So if you are interested, it's something called deal packaging or deal selling. If you're interested in finding out more, click the link in the description and you can find out exactly how I'm taking people, helping them to start a business and scale it to make money every single month, thousands of pounds. If you're interested, click the link in the description, you can find out more. Other than that, I hope you've enjoyed the video. If you want to check out this video here, YouTube seems to think you might like it. And I'll see you in the next video.